This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So we're now going to go through and move on to the second part of this chapter, which is looking at how to consolidate an overseas subsidiary. Now, the issue that you've got when you consolidate the overseas subsidiary is that the functional currency of that overseas subsidiary is different to the currency that the group accounts are presented in. Okay. Now, the group accounts are presented in that presentational currency. So what we need to be able to go through and do is we need to be able to go through and translate those results within the group statement of financial position, within the group statement of profit or loss, before we then go through and do the standard consolidation with regards to adding across 100% of the assets and liabilities of the subsidiary and the parent, and adding across 100% of the revenues and the costs of the parent and the subsidiary. Okay. And the rules themselves aren't too technically difficult, but it is the application of them that will really challenge you within any exam. Okay. So what have we got? Well, the fundamentals, the essentials that we have with regards to the group statement of financial position are very straightforward, because we translate all the assets, all the liabilities at the closing rate. So it doesn't matter whether they're monetary or non-monetary. So don't go back to looking at the individual company rules that you recall from the previous sessions. We're looking here at getting the subsidiary ready for translation. So everything has to be translated, whether it's monetary, whether it's non-monetary, it needs to be translated from the functional currency of the overseas subsidiary into the presentation currency of the group. That's really straightforward. Translate everything at the closing rates. With regards to what you then go through and have within your statement of profit or loss and other comprehensive income, again, all the income, all the expenses are translated at the average rate. Technically, they're all translated at the historic rate. So each individual entry for revenue, each individual entry for costs is going to be translated at the historic rate. How many transactions go through profit or loss of the subsidiary in a calendar year? Millions. So provided the rate stays fairly constant during the year, there aren't any huge fluctuations, we can use the average rate for simplicity. Okay, so that's what we apply in the exam. That's also what you would apply within the real world, unless there was any significant fluctuations within the currency. Okay, but within stable economies, that should not be the case. So the fundamental rules that we have are really straightforward, aren't they? Look, translate everything at the average rate. In the statement of financial position, translate all the assets, all the liabilities at the closing rate. However, for the statement of financial position, it just gets that little bit more challenging, because there's an asset that isn't included within the SFP of the sub, which is your goodwill. Okay, so we'll need to translate that goodwill once we've calculated it in the overseas currency first. So within the functional currency, we calculate the goodwill and then we translate it. It's an asset of the sub, so we go through there and translate that at the closing rate. Okay. What we'll also need to go through and do as well is to help us work out the non-controlling interest, to help us work out the group retained earnings. We'll need to work out the post-acquisition retained earnings of the subsidiary. So we will do that within a separate working. There's a new working that we need to play around with to work out the post-acquisition retained earnings. The post-acquisition retained earnings in the presentation currency of the group. Okay, so what we do there is you translate all the assets, all the liabilities at the closing rate, because that's what they will be consolidated at, isn't it? Okay. Then what we need to go through and do, you've got to be careful. The equity share capital is translated at the historic rate, okay, because that's the rate that was in place when the parent acquired the subsidiary. The reserves at that date of acquisition, so referred to as the pre-acquisition reserves, are translated at the historic rates, because again, that's the rate that was in place when the acquisition took place. You know from your accounting equation that the net assets equals the equity. So you can make your working balance, and then the post-acquisition figure is there as a balancing figure. And then what we can do there is that post-acquisition figure, we can give the non-controlling interest their share in the NCI calculations, and the group their share within the group retained earnings calculations. Yeah, you can see why it gets troublesome. So once I've translated the assets, liabilities, worked out the goodwill, worked out the post-acquisition reserves, you've then got this really hard bit, which we'll look at in a separate video, of calculating the exchange differences in the subsidiary, because we're using all these crazy rates, closing rates, historic rates, average rates. Boy, oh boy, oh boy, that's going to go through there and hurt your head, isn't it? Okay, so it's about knowing the fundamental rules. If you know the fundamental rules, you're not going to go too far wrong. Okay, statement of financial position. What are the fundamental rules? Okay, they're there. The basic one is to translate all the assets, all the liabilities at the closing rates. Once you've done that, you need to work out the goodwill. The goodwill is an asset of the subsidiary. So we calculate it in the functional currency of the subsidiary first, before we then translate it at the closing rates. Okay. We need to work out the post-acquisition retained earnings, or the post-acquisition movement in retained earnings from our new working that we have there. And then you've got these exchange differences that we'll touch upon later. And then in the group statement of profit or loss and OCI, the overseas subsidiary is translated at the average rate. Okay, everybody got that? They're the rules. Make sure that you know them.